So boring zone 2012, 27%. Boring zone 2016, 38%. Boring zone 2020, 20%. Boring zone 2024, 27%. Right, so it's smack in exactly what you'd expect. And what comes next is the banana zone. And I don't want you guys to miss it because you're getting caught up in short-term time horizons of traders on Twitter. That's their time horizon. Nothing wrong with being a trader. I just don't think you'll make as much money. So I think you're better off to think of the long-term gain is how do I use these kind of opportunities to put as much money in as possible so I can capture the big upside when it comes.
Raoul Pal begins by emphasizing the inevitability of market corrections. Drawing on historical data, he notes that corrections of 30% to 50% are not only normal but should be expected. He recalls the significant corrections in 2021, 31%, and a massive 55% before the market climbed to new highs. These corrections, though daunting, are part of the natural market cycle. Raoul stresses that rather than being fazed by these downturns, investors should view them as opportunities to buy at lower prices and strengthen their positions. One of the key concepts Raoul introduces is the banana zone, a metaphorical phase where the market is poised for substantial gains following a period of correction or consolidation. He cautions against getting caught up in the short-term noise of social media and day trading, which can lead to missing out on the bigger picture. Instead, Raoul advocates for a long-term investment strategy, where the focus is on accumulating as much capital as possible during market corrections to maximize gains when the market enters the banana zone. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
But I don't want you to miss the opportunity or to get carried out just when the opportunity is arriving. So those are the corrections. Then we saw in 2021, two corrections. One was 31%, one was a gigantic 55% before it went back up to new highs. And then we had that kind of stunted high. So the point being here is expect corrections. You can expect anything between a 30 and a 50% correction to happen, and you shouldn't be fazed by it. You should be actually looking forward to them. So that's what we're doing now. That's the kind of cycle we're seeing now. Now, I wanted to go back also to ETH, because ETH was a smaller token back in 2019, 2020, and we had a 67% pullback when Bitcoin had done 51 and a 68 when Bitcoin had done 62. So more volatile, earlier stage tokens tend to underperform on the downside and outperform on the upside. So just keep that in mind when you've got your asset allocation, which is why I'd rather hold the bigger tokens and not have too much stuff further out the risk curve. Memes are fun. I own some memes, but I don't own more than 10%. And that's what I've said to you is please don't own more than 10% in the stupid liquid stuff because you think it can do 100x. I understand that, but it'll still make you a lot of money if it's less than 10% of your portfolio. But it won't do if your whole portfolio is those and it goes down 99%. Again, it's part of this don't fuck this up thesis. It's super important. So let's talk about the banana zone, because everybody cares about banana zone. All of our hopes and dreams are in it. And I don't want the stupid fucking, well, you promised bananas. I've never promised bananas immediately. I've told you this is how it plays out. This is a period of time. I've also talked about the boring zone. So you've seen this chart before, but now we've just added the percentage corrections in the boring zone to make it even more clear to you guys how this works. So boring zone 2012, 27%. Boring zone 2016, 38%. Boring zone 2020, 20%. Boring zone 2024, 27%. Right, so it's smack in exactly what you'd expect. And what comes next is the banana zone. And I don't want you guys to miss it because you're getting caught up in short-term time horizons of traders on Twitter. That's their time horizon. Nothing wrong with being a trader. I just don't think you'll make as much money. So I think you're better off to think of the long-term gain is how do I use these kind of opportunities to put as much money in as possible so I can capture the big upside when it comes. And I've shown you why that's not just a hunch based on these charts, it's actually based on the everything cycle. And that this macro spasm is actually the opportunity to really think about this, how you want to get involved, where you can find money to add, how you can get your portfolio set. It applies to tech stocks, it applies to equities overall, it applies to emerging markets. All of these things are setting up perfectly, even to commodity manufacturers, mining companies, any of these things, car companies, all of the cyclical plays, they're all driven by this. So this is the opportunity that you've been asking for. This is the last chance to be able to do all of this. So I look at these with glee and say, thank you. All I need to do is find some money to put in because I'm max allocated, but I do have an income. So, I try and scrape my bank account for any excess that I've got that I won't need over the next few months and stick them into markets. I mean, I don't sell anything in crypto. I've not sold anything, meaning my overall portfolio at all since 2020. And I just continue to compound and add, and that's worked for me really, really well. For those of you who keep asking, no, my allocation hasn't changed. It remains that my core portfolio is in Solana. I have some memes, which are Church of the Smoking Chicken Fish. I have Whiff, Bonk, some Doge. And if those go up and down 80%, it doesn't matter to me. It's fun. I actually think they'll do well. You may have a different token. They're not my recommendations. I'm not trying to shill you into buying anything like that. If you just want to stick with Bitcoin, it's fine. Ethereum has been a hairy ride. Now, part of what's been going on is jump trading have been dealing with legal suits with the SEC, CFTC, and others, and are closing up shop in market making in crypto. And they've been fire selling everything. And that's created a huge overhang. A lot of this boring zone has actually been the overhang of selling by Grayscale as they unwind the trusts, Germany selling Bitcoin, Mt. Gox selling Bitcoin, the FTX estate selling Solana and other tokens, and then jump trading. So that's what's been causing this really. This last spike was this macro spasm on this small macro shock.
The boring zone is another critical phase that Raoul discusses. This period is characterized by relatively flat market performance and frequent, smaller corrections. Raoul uses historical examples from 2012, 2016, and 2020, showing that during these phases, corrections typically ranged between 20% and 38%. He warns that many investors lose interest or become disheartened during this phase, only to miss out on the explosive gains that follow. Raoul also touches on the current supply dynamics in the crypto market. He explains how factors such as token unlocks from new projects, selling pressure from entities like Grayscale, and liquidations from distressed assets like those from Mt. Gox and FTX have contributed to recent market behavior. Despite these challenges, Raoul remains optimistic, suggesting that as these assets move into stronger hands, the market will eventually absorb the excess supply, paving the way for future growth.
And again, let's see, because, let's see what happens with the Iran-Israel situation, because that could create another period of fear. But generally speaking, you get fearful of the rhetoric and buy the bullets. That generally has worked in markets over the years, although, trading war is never not something you want to aspire to, but that's how it generally works. So the boring zone, driven by excess supply. Also, we've got a lot of token unlocks from newer projects. So all of that supply, plus all the amount of memes, has taken a while to digest. Liquidity will digest it. Think of it as eating up all of the supply as the holders from the last cycle where things went wrong, like the FTX estate, etc., start divesting those assets, putting them into stronger hands, allowing the markets to rise over time. So where are we in markets? Well, here's the Solana chart. I believe we've been building this inverse head and shoulders, which is a large pattern. And we've been having this kind of rectangle move on the side. We retested the neckline. It popped through today. We got down to wherever it got to, 105 or something. I think this probably holds. It doesn't really matter because I don't really trade the daily chart. But this kind of consolidation pattern in Bitcoin, it's a part of a larger cup and handle pattern. ETH looks a bit messier, but maybe that's going to give us better opportunities. The other part of my portfolio is I've been buying the high value NFTs from great artists that I think are going to maintain value over the next 10 and 20 years. So I will use this opportunity as well to probably add to my NFT portfolio, because ETH versus Solana has come down and I own a lot of Solana. I just need prices to come back up again a bit, and then I'll do some allocating there. So hopefully, I've shown you that these things are scary. I get it. These are not nice to deal with. You're all asking for questions. What the fuck is going on? Why are my bags being used? Where's my bananas? I want a market that goes up. That's not how the world works. The world works however it works. Your job, and the job of every bull market is to throw you off. Your job is to not part with your tokens. I've explained this many, many times. That is your single job. If you can just not fuck this up, keep hold of your tokens, and then eventually the banana zone comes and we can realize some of our hopes and dreams. Now, obviously, there is a risk that may not happen. I don't see it in all of the macro work. And between myself and Julian Bittel at Global Macro Investor, we do more work on this than anybody else in the world without question. Doesn't mean we're 100% right, but the odds are stacked in our favor and the everything code is our friend. Anyway, stay safe out there. I don't know whether the bottom's today, next week, the week after. I wouldn't try and time the bottom, but I would try and think about how do I get more money into these markets in a kind of measured way, whether you dollar cost average in. I don't really know. I'm just trying to wait for my Cayman bank to transfer money to the intermediary agent and then into my crypto account so I can buy some. So it's a process for me. Some of you, it can be much quicker. Don't pull the trigger too fast. Just be considered. Let things see how they play out. Let's see what the Middle East situation plays out. And then I think we'll get some clarity. But we know behind us is the macro. Having a macro framework is important.
Raoul shares his personal investment strategy, emphasizing his commitment to a long-term vision. Since 2020, he has not sold any of his crypto holdings, instead choosing to compound and add to his portfolio. He continues to allocate resources into assets like Solana and high-value NFTs, confident in their long-term value. Raoul advises viewers to remain steadfast in their investments, avoiding the temptation to sell during downturns and focusing on the eventual rewards of patience and strategic planning. Raoul acknowledges the uncertainty in the current market, particularly with geopolitical tensions like the Iran-Israel situation potentially impacting market sentiment. However, he reiterates the importance of staying focused on the macroeconomic landscape and not being swayed by short-term fluctuations. Raoul's message is clear. The key to success in these markets is not about timing the bottom, but rather about maintaining a disciplined approach to investing and staying the course. Please like and subscribe my channel.